President Biden has unveiled his new plans for the U.S. economy.
During a speech in Chicago, he touted growing the economy by focusing on expanding the middle class. Mr. Biden has faced skepticism from the American public over his economic record. High levels of inflation.
In the future, if I'm reelected, things are going to get much better.
Have you ever wondered how the economic policies of President Joe Biden are shaping the future of the American economy? As we delve into 2024, it's crucial to understand the potential impacts of these policies on our financial landscape. Stay with us as we unveil the economic forecasts for 2024 and analyze how Biden's administration might influence your wallet, job prospects, and investments. The economy is a dynamic entity, influenced by a myriad of factors, including government policies, global events, and market sentiments. As we approach 2024, understanding the economic forecasts becomes essential for individuals, businesses, and policymakers. This analysis will focus on four main areas: inflation and monetary policy, the labor market and employment, the stock market and investments, and the federal budget and debt. We will draw from recent studies, data, and expert opinions to provide a comprehensive view of the potential impacts of President Joe Biden's policies on these critical aspects of the U.S. economy. Inflation and monetary policy. Inflation has been a significant concern in recent years, and its trajectory will be crucial in 2024. The Federal Reserve aims to keep inflation at around 2%, but recent data suggests it could hover around 3% to 3.5% in 2024. The Biden administration's fiscal policies, including increased spending on infrastructure and social programs, could contribute to higher inflationary pressures. However, these initiatives are also expected to stimulate economic activity and job creation. The Federal Reserve has been actively managing inflation through interest rate adjustments. In 2023, the Fed raised interest rates several times to curb inflation, bringing the federal funds rate to a range of 4.5% to 4.75%. For 2024, further rate hikes are anticipated if inflation remains above the target level. Higher interest rates typically lead to increased borrowing costs for consumers and businesses, potentially slowing down economic growth. However, they also aim to stabilize prices and maintain purchasing power. The Biden administration's efforts to address supply chain disruptions, increase energy efficiency, and promote domestic production could help mitigate some inflationary pressures. For instance, investments in renewable energy and infrastructure projects are expected to create jobs and improve productivity, contributing to long-term economic stability. However, the success of these initiatives will depend on effective implementation and coordination with private sector stakeholders. Inflation also affects everyday consumers through the cost of goods and services. Higher prices for essentials such as food, housing, and healthcare constrain household budgets, particularly for low and middle-income families. The administration's proposed measures, such as targeted subsidies and tax credits, aim to alleviate some of these burdens. Additionally, efforts to increase affordable housing supply and reduce healthcare costs are critical components of the broader strategy to control inflation and support economic well-being. Labor market and employment. The labor market has shown resilience post-pandemic, with unemployment rates dropping significantly. In 2023, the unemployment rate averaged around 4%. Projections for 2024 suggest a further decrease, potentially reaching 3.8%. The Biden administration's focus on creating green jobs, investing in technology, and supporting small businesses could play a pivotal role in enhancing employment opportunities. One of the key components of Biden's labor market strategy is the emphasis on green jobs. The administration has committed to substantial investments in renewable energy, electric vehicles, and energy-efficient infrastructure. These initiatives are expected to create millions of new jobs in sectors such as solar and wind energy, electric vehicle manufacturing, and sustainable construction. For example, the U.S. Department of Energy projects that the renewable energy sector alone could add up to 1 million new jobs by 2030. In addition to green jobs, the Biden administration is investing in workforce development programs to equip workers with the skills needed for the evolving job market. This includes funding for vocational training, apprenticeships, and education in high-demand fields such as information technology, healthcare, and advanced manufacturing. These efforts aim to reduce the skills gap and ensure that American workers are prepared for the jobs of the future. Small businesses are also a focal point of Biden's economic policy. Programs such as the Small Business Administration's SBA, loan and grant initiatives are designed to provide financial support and resources to small enterprises. By fostering a favorable environment for small businesses, the administration hopes to spur innovation, job creation, and economic growth at the local level. Stock market and investments. The stock market has been volatile, reflecting broader economic uncertainties. As of mid-2023, the S&P 500 had experienced a 15% increase, driven by strong corporate earnings and investor optimism. For 2024, analysts predict a more modest growth of around 5% to 7%. Factors influencing these projections include interest rate hikes, global economic conditions, and regulatory changes under the Biden administration. One of the key drivers of stock market performance in 2024 will be corporate earnings. Despite the challenges posed by inflation and supply chain disruptions, many companies have reported robust earnings growth in 2023. This trend is expected to continue, albeit at a slower pace, as businesses adapt to new market conditions and invest in innovation. Sectors such as technology, healthcare, and renewable energy are likely to remain strong performers, driven by increased demand and government support. Interest rate policies will also play a crucial role in shaping stock market dynamics. Higher interest rates typically lead to lower stock valuations as the cost of borrowing increases and future cash flows are discounted more heavily. However, if the Federal Reserve can successfully manage inflation without stifling economic growth, the stock market could continue to see positive returns. Regulatory changes under the Biden administration are another factor to watch. Efforts to increase corporate taxes, strengthen antitrust enforcement, and enhance environmental regulations could impact certain industries. For example, the administration's push for greater accountability in the tech sector and its focus on sustainable practices in manufacturing could lead to increased compliance costs for some companies. However, these policies also aim to promote fair competition, protect consumers, and support long-term economic sustainability. Investors will also need to consider geopolitical risks and global economic conditions. Trade tensions, conflicts, and economic slowdowns in major markets can influence investor sentiment and market performance. Diversifying investments and staying informed about global developments will be essential strategies for navigating potential market volatility in 2024. Federal budget and debt. The federal budget and national debt are critical components of economic stability. In 2023, the U.S. federal budget deficit was approximately $1.5 trillion. With the Biden administration's continued focus on infrastructure, healthcare, and social welfare programs, the deficit is expected to remain substantial in 2024. The national debt, which surpassed $31 trillion in 2023, is projected to increase further. This raises concerns about long-term fiscal sustainability and potential impacts on future generations. One of the primary drivers of the federal budget deficit is the administration's ambitious spending plans. The Infrastructure Investment and Jobs Act, which allocates $1.2 trillion over 8 years for infrastructure projects, is a cornerstone of Biden's economic policy. This funding aims to modernize transportation networks, improve broadband access, and upgrade water and energy systems. While these investments are expected to stimulate economic growth and create jobs, they also contribute to the budget deficit. Healthcare spending is another significant factor. The Biden administration has prioritized expanding access to affordable healthcare, reducing prescription drug prices, and addressing the opioid crisis. These initiatives require substantial funding, adding to the federal budget's expenditure. Additionally, the aging population and rising healthcare costs further strain the budget. To address the budget deficit and national debt, the Biden administration has proposed several revenue-raising measures. These include increasing taxes on high-income individuals and corporations, enhancing IRS enforcement to reduce tax evasion, and implementing a minimum corporate tax rate. While these measures aim to generate additional revenue, they also face opposition and potential implementation challenges. The long-term sustainability of the federal budget and debt depends on the balance between spending and revenue generation. Effective management of government finances is crucial to maintaining economic stability and ensuring that future generations are not burdened with excessive debt. Policymakers will need to carefully navigate the trade-offs between stimulating economic growth, addressing social needs, and maintaining fiscal discipline. The implications of high national debt are far-reaching. Interest payments on the debt consume a significant portion of the federal budget, limiting the government's ability to invest in other critical areas. Additionally, high debt levels can lead to higher interest rates as investors demand greater returns for lending to a heavily indebted nation. This can increase borrowing costs for both the government and private sector, potentially slowing economic growth. As we navigate through 2024, the economic forecasts highlight a complex interplay of growth opportunities and potential challenges. President Joe Biden's policies will significantly influence the direction of the U.S. economy, shaping everything from inflation and employment to the stock market and federal budget. Staying informed and adaptable will be essential for individuals, businesses, and policymakers to thrive in this evolving economic landscape. Subscribe to our channel, hit the notification bell, and stay tuned as we continue to unveil the secrets behind the numbers and explore the forces shaping our economic future. Let's keep the conversation going in the comments below. What are your thoughts on the economic outlook for 2024?